Macrotech Developers is on our radar now. They've achieved 48% of their pre-sales guidance for FY24 already. The company's pre-sales have surged 12% year-on-year. Collections have also surged, while the net debt has come down in Q2. Abhishek Lodha, the Managing Director and Chief Executive Officer at Macrotech Developers, is joining into the conversation now. Abhishek, thanks a lot for joining in, and happy to have you here on CNBC-TV18. This is a good time for most real estate companies, and for your own company, you've achieved almost 50% of your pre-sales in FY24 already. Are you on track to achieve the full year guidance of 14,500 crores? And what are the demand trends looking like now?
Good morning, Sonia, and a very happy early Diwali wishes to you and all the viewers. The real estate cycle, as I've said several times before, we are in year 3 of a very long 15-ish year cycle as India moves from being a low-income to a mid-income economy. And we're seeing that play out quarter after quarter. So as you mentioned, we are now close to 50% of our pre-sales guidance. We feel we are very much on track for our overall guidance of 20% growth from last year's number to get to about 14,500 crores of pre-sales. And generally, one is seeing that the consumer understands the fact that housing is going to be good quality housing is short supplied in our country. And consumers realize the very important role that housing plays in their lives and the lives of their families. So we see the need for people to upgrade. As you may have noted, our pricing YTD increase is at about 3%, which is again in line with our overall target to keep price growth below wage growth. So that while people upgrade and get into new homes and see nominal price growth, it's below wage growth, so that affordability keeps increasing and more people can afford a better quality home. Generally, we feel that the market's in a steady phase. We see this compounding in terms of pre-sales as well as good affordability continuing for a longish period of time. And while there will be blips along the way, generally the housing market for the big players who deliver good quality product and service is in a good space.
Okay, all right. Hi, Abhishek. Good morning. Take that point on board. So you're appearing reasonably confident about achieving those numbers. And as you said, price increases have been 3%, but you're looking at that very, very closely to keep affordability as well in check. Let's talk about cash flows, though. For the first half of the year, I think cash flows have been around 2,100 crores odd. The guidance for the year was around 6,000 crores. Do you have more launches in the pipeline? Tell us how you go about that.
Nigel, morning. As you know, the housing industry tends to be seasonal on a quarterly basis. Q2 is generally the weakest quarter of the year because you have the monsoons, especially in Mumbai, and sometimes you also have the inauspicious period of Pitru Paksh, which this time is in Q3. Having said that, we feel quite confident about our overall free cash flow generation. As you would have noted, in spite of being very, having achieved 80% of our business development growth in Q1 itself, we are at about just under 15,000 crores out of a 17,500 crore target. We've still managed to reduce our debt in the first half, and we continue to focus on continually reducing leverage and getting it below our stated objectives of 0.5 times debt equity and 1x of our operating cash. And we expect our operating cash to be around that level that we guided earlier of 6,000 crores.
Abhishek, hi, good morning. I just want to pick up on that cycle point that you made. You said we are in year 3 of what is, you called it a 15-year cycle, but that is India becoming a middle-income country cycle. But we are in what year of the real estate cycle? Because the real estate cycle will be broken up within that 15-year cycle, right? So in that sense, where are we?
Morning, Prashant. I think, you would have seen this play out across many different countries. As a country moves from low income to mid income, you get this once in the lifetime of a country cycle where housing becomes secular structural growth story for 15 to 20 years. You saw it in the US after the Second World War from the mid 40s to the mid 60s. You saw it in China from the late 90s to the 2015 or so, and you've seen that cycle play out in many countries, because when a country moves from low income to mid income, you have a large number of households who were earlier not home ownership capable now become home ownership capable, and at that time the demand is substantially more than the supply can match, and therefore the usual cyclicality of housing, which is more like 5-6 years, goes away and you get a much longer structural growth cycle. And we feel this is that time in India's economic trajectory. And therefore, we are only in year 3 of this housing super cycle, which will be, in our opinion, 15 years or thereabouts. There may be, blips along the way, because if there are macroeconomic challenges, which will inevitably come in the next, in this 15-year period, there will be blips. But generally, we see supply, and especially good quality supply, being lower than demand, and therefore this cycle being quite long.
You don't see. So you've obviously sort of thought this through, and you've seen previous cycles as well. But there's no risk of in a way, I don't know how else to put it, but like a blowout top, which then kind of leads to stagnation for some time. Overbuilding, overinvestment, which then needs to be corrected over many years. You don't see the risk of that, especially here in Mumbai. Not just you, but the sector.
Prashant, our view, as I said earlier, is that supply is far below demand.
Okay.
The thing that we have to watch out for is that pricing growth should not become excessive, because in India, ultimately, we are talking about more and more people being capable of affording a home, which is what is going to drive this super cycle. And that's why, as a company, we've continuously said that we want to keep price growth below wage growth so that affordability keeps getting better. As long as that is the case and people don't get over ambitious on price growth, we will see the cycle being quite long.
Okay. I want to understand, Abhishek, also what the plan is in other markets. Currently, you don't have too much of an exposure, whether it's in markets like Pune or Bengaluru, but you have a plan to take your market share up there by the end of this decade. Tell me a little bit about the near term, right? What are the new launches in some of the newer markets that you're looking at, and how do you plan to, raise market share there?
Sonia, 2 years ago, we had about 400 crores of sales in Pune. For the year ending March 23, that was 1,200 crores. And this year, we expect to cross 2,000 crores. So we are clearly moving towards being, amongst the top 2-3 developers in Pune. And we should be in the top 3 by the end of this year, and hopefully then get even bigger from there. Bangalore, as we've said earlier, we are in our pilot phase. We are hoping to have our first launch in Bangalore in the month of November, which is just a few days from now, and that's going to be the start of our journey in Bangalore. We expect to take 3 to 4 years in delivering our product and establishing our brand and establishing our local operating capability and team before we scale up in Bangalore. So for the next 3 years, it's about Mumbai and Pune. First half of the year, we generally keep launches low because of the monsoon unpredictability as well as certain inauspicious periods. Second half of the year, we have, almost 7 new locations that we'll be launching, compared to just 2 in the first half of the year. So that is going to give added momentum to our sales trajectory. But generally, the new cities, as we've seen, we've ramped up quite rapidly in Pune because the demand for good quality product from a strong brand is very, very high.
So you said your Bangalore launch will be, the first launch is in November this year, is it?
Yes, Sonia. So in a few days from now.
Okay. All right. Abhishek, the last time we spoke, you were telling us about the facility management service and how that business, is gradually seeing a bit of an uptake. Tell us about your annuity income. What do you end this year with, and where do you see that number headed?
Nigel, we have 3 prongs in which we are building annuity income, and we are doing that with a view to not go far away from our ROE targets of 20%. We have our digital infrastructure platform where we're building warehousing and industrial across the country. We have facility management. And then, of course, we have select office and retail locations. We expect to end this year at a run rate of about 250 crores per annum of annuity income. And we expect to grow that by fiscal 26 to about 500 crores of annuity income. And by the end of the decade, about 1,500 crores of annual annuity income.
Okay, Abhishek, we'll leave it at that. Thanks a lot for joining in and taking us through your numbers. All the best for the second half of the year and, for your new launches, especially in some of the newer markets. That's Macrotech Developers. They've already achieved almost 50% of their pre-sales guidance, and they hope to meet their full year guidance by the end of FY24 in terms of pre-sales. The stock is up almost 4.5%. The street definitely likes what they heard. Let's